Mm. There we go. All right, what's up, everybody? Today, I have a little bit of technical difficulties. I don't know what's wrong, but OBS has decided to not let my video work. That is something for me to fix this weekend. So look at my avatar, which is a stockbroker troll. Thank you for joining me on this Friday, spending this Friday afternoon. It has been a very interesting week as we come to the close of January 2023. Let's pull up my chart here. So what I like to do at the beginning of every broadcast is do a little bit of a market update for all the major stuff that I like to look at. If you guys have something that you want to have me take a look at, a symbol, a cryptocurrency, a stock, I'll give you my opinion. It's just my opinion. It may not be what you want to hear. If it's some kind of a big hockey stick, I might tell you that you're getting a little greedy. Hopefully, we can all be happy with modest gains, but I know a lot of people can't. Hey, what's up, Stone Pilot? Thank you guys for joining me on Discord, YouTube, and TradingView. Love all my friends on all those platforms. I do this every Friday, 4 p.m. at the market close, and I just want to teach and educate. I want to share what I've learned from, it's a lot of alerts, what I've learned from years, a decade now of trading. I like to use Ichimoku. I like to use false breakouts. I call them spikes. And I like to put it all together to try to find high probability trades. Again, if you have any questions, just post them in the chat, either the YouTube chat, the TradingView live stream chat, and let me welcome everyone. Got questions? Call them out. And I need to add one extra caveat to TradingView. If you see a black screen, refresh the page. All right. So let me read what we got here. Hey, what's up, Joe Stock Trader? Where could I see you live? Did you get them set up? I don't see the live stream room. It's right there in live stream. You should be, yeah, you're there. You got them. Oh, excellent, excellent. Good. Yeah, so on Discord, I stream this. I have a Discord. I don't actually charge for it. That's because I'm a trader. I make my money trading. I don't want to take your money. I just like having a trading community to let people share ideas. I post my trades live there. I try to post trades as I see them in TradingView when at all possible, but sometimes I don't get around to that. But on Discord, I definitely post my ideas in real time. So check the links below. That's my plug for the beginning. All right, let's take a look at what's going on this week. Bitcoin is probably the most interesting, most watched instrument, although some may call it money. But what it's doing right now, I find very interesting. And let's take a little step back, because I've been talking about this week after week after week. So one of my key strategies, let's just clean all this up. One of the key strategies that I look at with Bitcoin is the Ichimoku cloud breakout. And a few weeks ago, it was a Friday, as a matter of fact. It was Friday, let's see, the 13th. Ooh, Friday the 13th. Bitcoin finally broke out of the daily Ichimoku cloud. Good evening, Lorenzo. At the same time, momentum, the lagging span, was getting out at the same time. And that's what you want to see if you are looking for a confirmation of a bullish trend to start. There were key resistances that we needed to look at that Bitcoin was free to move up to, and they're not hard to find. This right here, the November the 5th high of about 21,470, that was the pre-FTX high. Then we had another high in September, and then finally we had another high in August. So those were going to be our key resistances, nothing fancy. And then one more resistance we will look at is from that swing high in August down to the low. We could use that as one, not trying to do too many lines. And then the next swing high up here down to the swing low is there. So right around 24,000 is the 50% there. And so these would be the levels that we would look for Bitcoin to start to respect. Now, as things went along, Bitcoin pretty much shot through that 50%, so we don't even need to look at that. But this pre-FTX high, that held the price action for quite a while until it busted through again. And then what we're up to now is a fight at the September high right here. And so that's where we stand going into the weekend right now. And it's interesting to see how price respects these highs as it moves up. Still a bullish trend. Now, one thing I really like to see is some sort of a fake out. And that's exactly what we got on Wednesday of this week. As we're fighting against this 22,000, let's call it 800 to round it, we got one of these volatility spikes on Wednesday. Stock market also did some volatile moves on Wednesday. But this right here defines the resistance. In other words, if price was going to go, it should have punched through, gone up to that 24,000 and continued on. But instead, it's starting to stall out, and we have one of two things going to happen. Either it's going to break this high. I mean, this is a liquidation high. A lot of people bought, and they got slammed back down. If it finally clears that, then we're good to go on to probably the next resistance after 24,000. But right now, this is a very interesting level because we could set up a trade, a short trade like so. We know that it's going to go if it breaks above that high. But if it does decide to hold this, if Bitcoin has gone long enough, if we've pumped hard, and we have for the whole entire month of January, then what we could end up seeing here in the next week or two is a pullback to 20K. Now, if we pull back to 20K, is that going to take away the bullish trend? No, because price will still be bullish above the daily Ichimoku cloud. In fact, if we had a quick move down, we wouldn't even get momentum, the lagging span, weak. So I would watch in the next week us to do some sort of pullback from this resistance, get some of this FOMO out of the way, get a good healthy pullback. And I say healthy because, come on, you guys have all seen hockey sticks before. If something goes up tons and tons of percents in a very short amount of time, that just means the snapback is going to be even worse. You really want to see a nice, consistent, slow move up for a sustained bullish trend. So a healthy pullback, I think, is warranted. And that's what I'm going to be looking for maybe to start this weekend, and into next week. We've had a very, very bullish January for all risk assets. It's the 27th right now. The 3rd of February is going to be next Friday. We'll do a 1-month recap for all the things. I think the TradingView actually, one second, let me pull it up right here. TradingView has a Telegram channel. Let me see. Copy. Can we do it? Yeah. So this is the month of January year to date cryptocurrency performance. So Bitcoin is up 39.93% as of writing this. Let's call it 40%. Ethereum up 33%. Binance Coin 24%. Dogecoin up 23%. Polygon 55%. Solana 142%. That had a long way to go. Cardano 55%. And my favorite, my actual favorite is Monero, only up 19.86%. But that is what we have seen thus far. I wonder if this is in TradingView where we can pull this from. Does anyone on TradingView know where you can actually pull this data? I can pull it up and see what the live stats are. If you do, post it in the chat. I'd like to know that. So let's see Ethereum, since we're looking at crypto. Ethereum also going on a bit of a run, but Ethereum's actually starting to show some weakness this week. One thing I saw on Ethereum was a breakout setup. Let's go back in time a little bit here. So when I'm looking for spikes, in other words, fake outs, just like on the top side of Bitcoin, you got it there? Okay, hold on, try that. Yes, okay, thank you. Can we do, all right, I'll look at that in just a second. Let me finish while I was staying with Ethereum and we'll take a look. So what I'd like to see is some sort of a big volatile move like we had here on Monday of this week. This was Monday around the cash market open of US equities. And Ethereum did this little dip right here and then recovered very quickly. Recovered very quickly into its range that it had established. Well, what you get from this sort of a pattern is you get a point where if it breaks this low, you can say that it's coming outside of this consolidation. And so this actually set up a spike breakout, as I like to call it, to break the low. But we've had a lot of consolidation in here, but it still hasn't actually gotten back to recover this part of the range. So Ethereum is already showing a little bit of signs of weakness, whereas Bitcoin over the week has been mostly up, spiky, but up. Ethereum is starting to turn down just a little bit. So that was the first little signal we had that maybe crypto was starting to find a top. Thanks, Elijah's Media. I appreciate those kind words. So that's what I'm starting to see here. Now, anything can happen, but I'm always going to be the contrarian. I'm always looking for the counter trend move. And finally got some setups this week that I think might be useful for that. Let's bring up this cryptocurrency heat map right here. So it looks like this is performance by the day. What about by the week? Oh, let's do the month. Okay, so this is for the month, pretty much what we just looked at earlier. Bitcoin, Ethereum, Binance Coin, and also this seems to have the stable coins. But yeah, this is where we stand for the month of January. Hello there, Owen Nations. How you doing? All right. So let's now jump over to equities. Do a quick recap because just like crypto, I'll clean this up a little bit. Just like crypto for the month of January, which starts here. There's the third, boom. It has also been bullish. S&P 500 has been bullish. How much are we up this week or this month? Info line, boom. 6%, not bad. Still not getting out of this consolidation. And you'll notice where we stand right now this week, where we've come to after a month of progress is actually the 50% level of the leg down from March. So we came to this level back in December, held it twice, and this is where we are holding. Right here is that December the 3rd CPI. haven't quite cleared that high that it set up. That's my bullish case. If we can clear the December high, that means that this is up good to go for a bullish year. Now, I don't know if you guys have noticed, but in the past, there is a thing called the January effect. Let me pull that up right here. So statistically speaking, myth. I don't think, oh, this is ad supported. Okay. Statistically speaking, let me look it up. Hold on. January effect statistics. So a lot of people may think that it is there. Investopedia is not going to do me wrong. Fine, I'll take your cookies. Of the 30 years since 1993, there have been 17 winning January months and 13 losing January months, making the odds of a gain only slightly higher than the flip of a coin. Further, since the start of 2009 market rally through January 2022, January showed 8 winners versus 6 losers. Again, a split of 57 to 43. Is that huge? Is that a guarantee? No. But on the balance of probability, a bullish January usually indicates bullishness for the year. Likewise, last year, 2022, while we started positive on January the 3rd, and by February, we were down 7% last year. A bearish January last year was a harbinger of a bearish year. So this is all just frou-frou and statistics and astrology and predictions, but we have a higher probability of having a bullish year this year because of the January effect than we would otherwise. So I'm feeling pretty optimistic going into this year. Not just because we've had a bullish run in the stock market, but also something interesting is happening in the VIX, which I like to look at. So the VIX, I've got this box drawn since back in 2022. Each time that VIX has gotten down into this range of 19 to 20, that ended up being a high in the stock market. And so we bounced once, launched off of it back in April. We hit it in March, April, came down August, that was the August high. And then the beginning of December, that was the December high. But now VIX is starting to actually break through this level. What does this mean? Volatility, or the VIX, is a measure of the implied volatility of SPY options. That's basically the tail of the dog wagging. This is what the market is pricing in future movement. And if the market goes down, it usually prices in higher volatility. And so as we start to see volatility fall off, that is a sign of the market going up. Where has this basically happened before? Well, if you look at the periods, this is what COVID did to volatility. Let's go out to the weekly. Big dips, big, huge moves spark fear. And that's why they call this oftentimes the fear index. And then as price goes up, the VIX starts to return lower and lower and lower to normal. Option sellers also use this to find out when they're able to sell rich premium. In other words, selling options. Selling options is still pretty good, not as good as it was in previous years. But IV remains a little elevated, but it is starting to come down. So option sellers are doing very well all the way back from October, but things are starting to kind of tighten up a little bit. I've been wanting to sell some covered calls, but all of the implied volatility for different stocks is just a little bit too low right now as the market creeps up. And that's the function of the market going up. So, dollar. The dollar index continues to hold at 102. This is a 50% retracement from the trend that started in May of 2021. And it's, again, another week goes by, it just kind of slows down right at this key 50% level. This is why 50% are so powerful. because price tends to respect it a lot. And so the dollar is starting to kind of round out the bottom right here. Dollar yen has already hit and held. In fact, it held almost, well, it held perfectly the 50% level of the low from January of 2021 up to the high that it set in October of 2022. It came down to this exact level, 127.27. Boom, kissed it right there. Beautiful, 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 beautiful. Let's see. Gold. Gold, I've been asked about. I got a lot of precious metal bug friends, and I've already got this marked off from, let's see, that would have been Friday the 13th, so live stream 2 weeks ago. You can go ahead and assume that gold is in a bullish trend, and yes, the targets for that, the next one's going to be 1983, and then following that, 2000, maybe the high again. Slowly it's creeping up, but gold is also bullish. The same thing with silver, but showing a little bit of stalling. Gold definitely on a more bullish trajectory than silver. Can you look at compound and Solana? What is the symbol for compound, Lorenzo? And by the way, if you guys have anything to look at or any questions, just stop me and ask. Please do. Let's take a look at your question here. So, Solana. Now, I had a friend of mine that really wanted me to keep, oh, bar replay is not available. Let's do Solana through an exchange. Kraken. Okay. So I remember very, very vividly when we had this move up in March of last year. I know I'm going back in time, but just bear with me. I had a friend of mine that really got interested in the project of Solana. He read a lot of bullish information from the developers and bought in heavy to about 100. Tried my best to get him to get out at 140. The reason for that was very simple. That was the same time that Ethereum was starting to top out at its 50% of the leg down at about 3,500 right there. This was April of 2022. And the whole market seemed to be kind of topping out. But I don't think he listened to me. Fortunately, I got him to get out at break even. But since that 100, man, it's been an absolute bloodbath. So when does this get bullish again? Well, I'm going to use Ichimoku to do the trend analysis. So what you see here is a little pop above the cloud here, along with your momentum there. So on Friday the 20th, that'll be last week, you actually got your first sign that Solana was getting bullish. It was finally getting on this bullish side of the cloud after this leg up right here. But if you'll notice, this is where the top of the cloud goes flat. Why is that? It's because Ichimoku is based on 50% retracements. That's why I like to use them. And so what you've got happening right now is Solana holding, at first it was holding that 50% of the FTX down move. Now I like this action right here. I like this action to come up, shoot down, and then hold. So what you want Solana to do going through this weekend and in weeks in the future is stay above this 23.35. It's doing good so far. You're bullish based on Ichimoku, or at least you were here, but you're kind of getting into that neutral territory again. The key level to watch is that price holds above 23.35 right here. Keep that going and you're in good shape. Start to turn over, get a little defensive. So everything right now, from Bitcoin to Ethereum to Solana, everything is sitting at a resistance. Even the stock market, like we were saying with the S&P 500, NASDAQ as well. NASDAQ is also holding at its resistances from December. Now we got to close above it this week and today. Today was a very bullish day. We got that punch above it, but we need to hold. And what I'm going to be looking for is for us to break, just like the S&P 500, for price to break the December high. So if we can get up into the 12,400, if we can finally punch up above that and get a close above that December high on the NASDAQ, get a close above the December high on the S&P 500, then I'm going to start to think, okay, this is going to be a bullish year. I'll be looking for pullbacks and BTFDing. But I'm still a little wary. I'm still a little wary of this big January movement, even though it implies a bullish year. It's gone a long way very, very quickly. And that is the way Januaries are. After many, many, many years of trading, January is the month where I am most tempted to go nuts. But likewise, it's the month in my track record that I sometimes really mess myself up. So I'm taking it easy, actually. I mean, I've been buying stocks at different points. Got into Bitcoin when it broke out. That's what my strategy tells me to do. And so I'm following my rules very, very closely. I'm only taking the best setups, even though the temptation is there to jump in and go nuts because, oh, I don't want to miss it. FOMO. But I'm staying patient because I know myself. And you should know yourself too. So if you aren't jumped into this move yet, especially with crypto, after it's gone this much, you got to wait for a pullback. I'm sorry. I know that you want to be in it. I know you don't want to miss it. But you got to be patient. You got to be patient. And you need to be a trader. The reason I say that you need to be a trader, especially with crypto, is in a single chart. Let me pull it up for you. A lot of people, either they bought crypto at a higher price, or they bought it at a lower price, or they just want to be fabulously wealthy because they're tired of working that job. Whatever your reason is for you want crypto to go up, you want it to come up to this all-time high again. You want Bitcoin to be up in the 60s. Maybe you want to get out at break even. Maybe you want it to double. Maybe you're listening to some people on Twitter telling you that, well, 300,000 is where it's going by 2025, something like that. That's okay. I mean, it's fine to dream. But you need to understand something very, very important. You need to understand what is going on this year different to the last 2 years. This run up here in Bitcoin, run up in all the things in 2021, or from 2020 to 2021, this was largely affected by this. This is the personal savings rate for Americans. Do you see something interesting about this chart? The big top out of personal savings in April of 2020. This is when everyone's afraid. This is when everyone was hoarding cash. This is when those stimmy checks started going out. This is when everyone was flush with cash, US dollars. And then a lot of people bought the narrative that cash was trash. They had to spend it as fast as they could. 2021 still at a very high rate of personal savings. People having cash on hand and they need to spend it. In fact, the personal savings rate for 2020 and 2021 was higher than it's been in, well, as far back as this chart goes, the 1960, the highest rates in history. And then now, where are we? Now the personal savings rate, the cash that people on hand, is back down to all-time lows. It's back down to, 2.4 it was in at the end of the year. Right now it's sitting at December 3.4. Back in 2005 it was at 2.1, almost all-time lows. Why am I showing this? Why am I relating this to Bitcoin? People don't have tons and tons of cash to throw at high-risk products. They just don't. They can't borrow it either because interest rates have gone up from 0. Yeah, maybe student loan forgiveness this year. I don't know. We've already. You saw what happened to that. They promised student loan forgiveness, and right after the election, they took it back. I don't know if you can bank on that or not. So, what is different? Quote, this time it's different. I love and hate that phrase the same. I say it with a smile. What's different between 2020 and 2021 in these big run-ups was that people had lots of dollars and they needed something to buy with it. And so they threw it at risk assets, from cryptocurrency to Tesla to Amazon to all the things trying to chase return. People don't have the cash on hand, and they also have a certain degree of fear. It's very recent, this big rundown in crypto. It's very, very recent. We're not going to get to the all-time high this year. We may not even get to the all-time high next year. What informs this wisdom is that back in 2019, on the last all-time high, you had a bear market, a big crash that cut it in half after everyone thought that it had stalled out, and then you had a fake pump, which in 2019, you know what comes next? Well, came all the way back down to 4,000 on COVID. So this is the fake pump after the last big bull cycle. This is not unique. We need to go back to BTC USD index. Hold on. It was 2013. Wait, there was... I showed it in last week's stream. There's another one like this too. But the key thing you really need to watch out for is something like this. Like, just because it gets going, it can go pretty violently. I mean, we could be, as far as this trend goes, we could be sitting at perhaps this. We could be sitting at a repeat of something like this. The top out, the bear move. This is kind of like our FTX move. And then we're just starting the start of this bull trend. But you need to trade this. In other words, when price gets up to 50% of this whole leg down, about 42,000, you need to really start thinking defensively. That's a really comfortable price target to look for in the long term. And what that ends up being, from even right here down to a break of the low, is a trade of like a 2-to-1. In other words, if it breaks the low that it set back in November, you need to get out, because it's probably going to come down to about 10K at that point. That would be an 85% correction. It would be the third 85 correction in Bitcoin's history. But the risk reward sits now at about 2-to-1. I like the risk reward a lot better 2 weeks ago when we first broke out with momentum and price. Can't go back in time, but the risk reward there was a lot better. A lot better. So be careful. What I'd really like to see is that pullback to 20K, and then you can possibly get a good 3-to-1 back up to that 50%. That's the reason I showed you guys the cash savings, the savings rate chart, is just to kind of counteract the propaganda that's going to be out there by the Bitcoin maxis, by the hardcore adherents saying, okay, this is it. All right, we're going to finally be replacing the dollar. No. I don't think there's that much money out there to go nuts wild. So play this trend defensively. I've seen it before, more than once. These bear market rallies. And even if you feel like you've missed it at 22K, there's a really good chance you could get it again. Bitcoin is very, very volatile. Very, very volatile. All right, let's check some things in the chat. IBM. Let's look at IBM on the Discord chat. Ooh, I like this already. I like this earnings dip. Thank you. Thank you, Coronel. The reason I like it, we can actually take off Ichimoku because it's showing us the same thing. That flat part of the cloud, that 50% retracement level, what are we seeing? We are seeing a 50% pullback from the last earnings rally in October. Boom, 134.38. Nice. I like it. That's a good level to look for a buy. It's messing around the chop before, but let's see, what close did we get today? That level from the low to the high is 50%, 134.38. Yesterday, Thursday, on earnings, it came down and closed at 134.45, holds it. And then today, closed 134.39. Holds it. It's holding that 50%. I like this. I like this for a pullback. This is good. Thank you. I'm going to write this down for Monday. What that means is I'm going to start looking at this very closely. It's already done it, actually. Oh, that's awesome. See, when you see these things, post them in the Discord, man. Yeah, that's really, really good. Hey, speak up. Speak up. Don't be afraid to be wrong. I'm wrong all the damn time. Come on now. No, excuse me. I'm confident. I'm right all the time. I'm Cramer. I'm just going to speak as if I know everything. No. So this is good. And I like this because if I was going to structure a trade around this, where I actually pull back at this level, I don't know if we're going to open Monday. Hopefully it's somewhere around here. But what I would look to do to start out a trade, if I was just trading the shares, actually, let me check something real quick. Let me check the IV, because I've started dabbling a little bit with options. I've been doing puts for bearish setups this week, but shares might be the way to go. So what I look for is this. From the leg down that we had on IBM, from the high here at 147.16 down to the low, that it hit on earnings yesterday, that sets up a really nice 50% level on the way up at about 140. You can also see where price holds it there. That's a really, really good looking resistance. I like that. So what I would look to do is, when we had this move up, this is Thursday. Okay, so today, if you posted about it, I would have seen this. I would have said, okay, on the 30-minute, we've got a TS recapture. In other words, it's come up off of this low. If you want to know why I'm looking at that, because I look for a 50% of something when it hits the low. So the low to here, boom. Okay, so now we've got that matching up right there. This is the next support that we can look to make a trade off of. Boom. So the first leg of the trade, I would take it up to there. And the beauty of it is I can set up a 3-to-1 right here. Okay. And so that's a really good looking trade. That's about $191 per share of risk. So in other words, if I was going to risk, let's say I wanted to risk $50. Keep it small in case we got a small account. So $50 divided by 1.91. That means I would buy 26 shares of this. So 26 times 134.32. On margin, that would probably take about $2,000 worth, because you get about 1.5 on a margin count. And that would be how I would do a swing trade on IBM post earnings. But because this is after earnings, and we all know that stocks and their implied volatility goes down after earnings, what I would look for, so down here in the bottom, this is using Thinkorswim. Unfortunately, TradingView doesn't have implied volatility, but I can visualize it and look it up in Thinkorswim. You see where we had this run up of implied volatility into earnings, and then boom, now we're in low implied volatility. That means options have gotten much, much cheaper now that earnings is over. You can see the yellow line, which is average. So this would actually be a good situation to use calls. It would. And if I was going to take calls, I don't take weeklies. I would actually look at calls to the next earnings cycle. And so I'd find something reasonable for, see, they usually have earnings in the end of January. So after January, they have earnings in April 19th. So it would either be options for April on IBM, or as the case may, there is an April or June. I would take them out that far. I mean, yeah, you can probably maybe get some weekly action, but they just expire too quick. Buy yourself some time. You'll thank me. I know a lot of people don't even know or don't seem to know that monthly option expiries actually exist, but they do, and they are a much higher probability because you're buying yourself extra time to play them if you do. So thank you, Cornell. That's a good call. I'm going to look at that come Monday. All right. Yeah, you're welcome, RV. Okay, let's go back up through the chat on TradingView. If you were checking alts, why not UBX? What do you mean UBX? What is UBX? Is UBX a Unity Biocheck? Let's see. That is something you kind of trade like a penny stock. You kind of hope for a big pump like this. Not my specialty. Matic, okay? Matic on the 15-minute chart. Look at it on Binance. We'll do 15 minutes. Okay. It's going up. All right. So Matic on the 15-minute is bullish. You got a TS recap right here today at about 2:30 p.m. where you top out and then you get back below the tinkers in here. That could be a potential short. How I would have set up a trade on that is look for this big leg up that started from this morning. And can we get a 3-to-1 off that Tinkinson right there, down to the 50%, which I like because you've got a high here to match it. Yep, it's the top of that range. This is your support. So if you're going to take a counter trend play, can we get that stop above the high? Ooh, okay. Yep. That would be what I would look for on that. That would be a short-term counter trend move. That's how I would look at it for Matic right now on the 15-minute. Still bullish. So when it gets to this point right here, better take some profit on that counter trend play. Where are we right now on Matic? Let's take a look. We're up around this craziness back in November. I can't really see. Well, hold on. I can find your resistance here. Let's go back and look. All right. So, good little example here of where you spike out and you come down like that. And then this high that it tried to make failed to get any higher. That was your signal to come down. So what I did there was I looked for that high. Then I looked for the reaction off that high to that low. That sets us up with the middle of this action, which it came up and held, kind of broke a little bit above it, and then held it again right there. And so that level, I'm happy with that. If I was playing this bullish into this one, into this this current timeline, 122, and let's see what it's doing at 122. All right, so 122 is still above us. I take it back. I would really, really like to see this counter trend setup happening up here, because then you're actually playing off a resistance. So don't know if I would take it or not, but if you wanted to structure it, it would look something like this. But I really want to take these counter trend plays when they're actually at a larger resistance. That's just going to increase the probability of them. So that's what I'm seeing on Matic. It's bullish, and so if you're going to take a counter trend move, it's going to be a lower probability. So just be careful. All right. Can you explain the moves like Daffy USDT? Daffodil? I would like to know why these coins pump that much. Is there a reason? Yes, because typically there are discords and telegrams of people that are participating in pump and dump schemes. And you, unless you're in these, you're not going to find out about them until they've already gone, just by simple virtue of seeing how much they've gone up, and that naturally attracting human beings to chase it. That's just something that we traders do when we're new. We chase performance because we think that what happened in the immediate past is going to happen for us. Very, very dangerous. Very, very dangerous, especially in this case right here. So from the start of this trend to here, you can see where we came up, made the high, and now we're holding at this 50% level. I'm not even going to say that. I don't mess around with things with this many zeros. But on price action itself, you can see what it's doing. It's holding at this 50%, while meanwhile failing to recapture this high. As long as it holds here, there's a chance it could go. But if you get back down into this territory right here, that's gone. It's done. It's over with. Maybe it'll go up, but that's going to be the highest probability that this thing's over when it finally breaks this 0.00513. So be careful with things like this. Why they move, somebody decided to pump it. That's it. That's the only reason you need. Maybe there is a reason. Well, the reason is more people bought it than sold it. That's the base reason. But the reason that happened is probably because there was an orchestrated pump. It's a bullish day. People are feeling pretty risky. It's a good environment for people to try to do pump and dump schemes. Be careful. Question, what is the indicator for Ichimoku Cloud you using, if you can let me know? Well, it's just very simple. We go into indicators on TradingView and we do Ichimoku. And it's Ichimoku Cloud. It's just the default indicator. And I use the base settings, 9, 26, 52, 26. If anyone in cryptocurrency tells you that there's a better number because reasons, they are incorrect. They just think they know better, and it's kind of memey. The classic settings set out back in 1930, almost 100 years ago, work just fine for identifying when Bitcoin and everything else is starting a bullish trend. Works just fine. How about CAT earnings for next week? Caterpillar. Well, I don't like to speak to things right before earnings because when I do, when people ask me these questions, I know what they're asking. They want to say, "Oh, I want to buy a call or a put." Well, you're going to lose. Over the long run, you're going to lose. It's gambling. If you accept that, if you accept that buying a lottery ticket on Caterpillar is the equivalent of buying a put or call right before earnings, that's fine, as long as you accept that's what you're doing. But on the balance of probabilities, if you take enough earnings plays, the reason you lose is because, let me clean this up a little bit. We're looking at a Thinkorswim chart of Caterpillar, and down below us is the implied volatility. Notice something. You see this earnings back in August of 2022. Right after earnings, what does implied volatility and therefore all the options do? They crash. Doesn't matter if you had a put or a call and you made money. IV crashed so much that you gave up a lot of those profits. Same thing happened here. Big implied volatility rise, earnings, boom. And so now what you have, price going up, earnings is a little high. We're coming into it. IV is actually below average right now, so maybe you won't lose as much from an IV collapse and vol crush, but still. What you want to do is you want to take options on stocks that you like or have an opinion about right after earnings when implied volatility is low, like that IBM we just looked at. That's a really good situation because the earnings have come out, the IV is already crushed, you're getting options, quote unquote, cheap, and that's the situation you want. But what you've got going on right now with Caterpillar is it's run up to earnings. So where's the risk reward? It's not on the upside People have already bought it up expecting the earnings to be good. So if earnings are actually good, well, what is the stock going to do? It's probably going to do nothing. Maybe even come down a little bit. At this point, in such a big run up prior to earnings, Caterpillar has got to really, really, really exceed expectations for you to get any more push to the upside. What's the most likely thing to happen is after a trend like this, what goes up must come down. So I'd be really careful. I would not take any options going into this. I think maybe some people might be tempted to take a call because it's going up or take a put because they want to go against it. But you got to get a really big earnings to actually play out. Here's a good example if we look at the weekly of COVID low to all-time high June of 2021. Boom. Look at that beautiful, beautiful hold of 50% back in September of last year. Awesome. Awesome. Now what you have on the weekly, this is the first thing I like to look for to know if something is actually properly breaking out. You got to close in the first week of January above the high. You get another bullish bar on the weekly. The middle of January, the week pulled down, held that previous high, and up it goes. Caterpillar's bullish. It's bullish. But it's bullish on a weekly, which means it's going to take longer than a weekly YOLO option. So I would not play this with a weekly YOLO option. If you want to hold Caterpillar as an investment in your portfolio, you got a really good reason to say this thing is making higher highs and it should continue up. So UBX USDT. UBX USDT. Okay. Well, you're just waiting for somebody to pump this, aren't you? That's fine. That's fine. You got this little initial pump right here. All right. Let's see. Let's take a look here. So I'm going to assume that you're finding out about this late. So what do we have going on here? All right. See if you can get a pullback to the 50% here and then try to play it back up to here, but don't let it get into no man's land here. You're welcome. Thanks for pointing out, Kat. That's a good call. That's a good call and a good example for 50% retracements. If you kind of look down on a lower scale, when you first had this leg up right here, there's your 50%. Let's see what happens. Comes down, holds it, breaks below it, starts to hang out a little bit. Should get one more. All right. When you get a big bullish bar like this, when you finally break above a major high, that can be your sign for something to continue on. That's why I really, really look for a closing bar above a past all-time high, just like we looked at in Caterpillar. So that sort of action can signal a next leg up. So what you're going to be watching for is either a pullback to the 50% here or a big solid green bar to close above there. I'm not going to draw the rest of that. UBX Ethereum. Oh, you're going to confuse me. Hold on. UBX. I mean, the problem with using cross pairs with things like Bitcoin and Ethereum is it's going to be really dependent on the UBX ETH. I don't know if we can get through that in trading view. The problem with that is if Ethereum moves, and Ethereum is going to be a more dominant, more heavily traded pair, if that moves, then it's just going to blow out whatever you're trying to play on the UBX. So I try to look at the dollar charts. That way you have, well, some would argue this, but a more stable baseline to compare the price action of. So, all right. We just topped out with the hour. If you guys got any remaining questions, feel free to ask them. Let me make sure that I haven't missed anything in the chat. Cornell, thank you. You only do simple buy and sell of stocks. On a non-technical point, I think IBM has more chances to go up if NASDAQ turns out to not be so bullish. You think that there's going to be a secular bull trend in IBM independent of the NASDAQ? Okay. I'll buy that. One final note that I've noticed that I want to point out from my experience just in the last few weeks of trading index futures, equity index futures. So for the better part of the leg down from August all the way through December towards the end of the year, basically the last half of 2022, on a day-to-day basis down in the trenches, one thing I noticed was it was always or generally better if you wanted to take a short trade in equity futures to short the NASDAQ, and if you wanted to go long the S&P 500, the ES futures. That has actually reversed, and let me show you what I mean by that. We'll use the 5-minute here. So today, and this has been the case for every day, today what we had on the NASDAQ was a big leg up around 9:30 right at the open, and then right around 11 o'clock, price pulled back to a 50% retracement of the leg up, and that is where it held to go on to its next leg. Okay, so that's that. Let me bring this up. Give me another one. Okay, that's the NASDAQ on the left. Show me the S&P 500. Okay. So here on the right, S&P 500, we had that same opening. Is this 5-minute? Yeah, we had that same opening drive here around the open. 9:10, open, there's 10. And instead of holding, that's right at 10:55. Let's draw 10:55 on here. 10:55 there. So both turned around at around 11 o'clock. But if you'll notice something, while NASDAQ held its 50%, ES came all the way almost back down to the open. So from the open, both did legs up. S&P 500, both did legs up. But on the pullback, NASDAQ held 50% of the move, whereas S&P 500 came almost all the way back to the open. Which is more bearish? Which is more bullish? It's NASDAQ. NASDAQ holds its supports better. And also, NASDAQ at 1140 broke its resistance, whereas it took until 2 p.m., almost 3 hours later, for the S&P 500 to finally break its resistance. So when you have one of these equity futures holding supports better and breaking resistances better than the other one, you can know which one to trade bullish and which one to trade bearish. This can be useful for, if you see the pattern in one, taking it in the the better instrument in the other. Or if you wanted to get really clever, you could look at some hedging opportunities. In other words, going along the NASDAQ, shorting the S&P 500, and seeing if that can work for you as well. So again, this is a reverse of what was happening in the end of 2022, where NASDAQ would break supports, whereas ES would hold them. So it's very interesting to me that this is kind of reversed. And NASDAQ as an index is actually more bullish than the S&P 500 as a whole. And I think part of that is because tech has started to give us a good lead. Oh, I posted Tesla at the beginning, but no one even called me out on it. Tesla, of course, has been a huge winner for lots of people. Earnings popped it up it goes. Be careful, folks. Be careful. There's a lot of people bragging to me about their Tesla gains, and they could still see Tesla come up to 207, the 50% of this leg down. But be careful. Be careful. We've had a very good month. Don't give it back. All right. Thanks. If you missed it, if you missed this, if you caught into the end of it, I do this every Friday at 4 p.m. You can definitely watch it. You can save the link, Owen Nations. Yeah. Hopefully go join on time next week. If you want, if you have questions, come join the Discord. I don't charge for it. I just build a community. And that's going to be it. So what about trading the retest of the engulfing candle after 3 pushes down on a chart? I don't trade that way. Good luck with that. Have a good weekend, everybody. We'll see you next week. Trade wisely.